There is a commercial real estate meltdown going on, and how is this going to affect the world moving forward? With over $1.5 trillion in mortgages due just in America over the next 3 years, and with some parts of the country seeing 30% vacancy rate, how are these large real estate firms that have a ton of commercial properties going to be able to repay their mortgages over the next 3 years? The Wall Street Journal recently published this article that I'll make sure I link in the description so you guys can use it as reference for seeing exactly what's going on in the commercial real estate market right now. In the article, they discuss how office owners are dumping lesser properties for whatever they can get for them, and that a lot of New York City developers are currently unloading their less favorable assets just in order to plan for what's going to be happening over the next 3 years. And one firm in particular, Blackstone, had a recent sale of the One Liberty Plaza Tower, which was sold for $1 billion. A massive discount from its $1.5 billion valuation in 2017. People are saying that the commercial real estate market is seeing its biggest downturn since World War II, with all the economic uncertainty and the high interest rates. I would love to know what your guys' the viewer's opinion is on the current commercial real estate market here that we're experiencing, and what your overall view of what the economic future is going to look like here in the world. There's a lot of people saying that we're going in for a massive recession, and I would love to hear what your opinion is. Now let's compare some stats on how much people were buying commercial real estate over the last couple of years to what they are currently doing right now in this space. So in the first quarter of 2023, investors in Manhattan purchased only $489 million worth of real estate. This is the lowest volume of commercial real estate purchased in Manhattan since the fourth quarter of 2009. And just for your comparison, so you have a perspective on how much these big real estate firms were buying of real estate, in Manhattan, the first quarter of 2022, you saw $5 billion worth of real estate purchased just in this quarter alone. This puts a lot of fear into people because typically the New York real estate market is the hottest place for insurance companies and pension funds to invest their money in order to hold these assets to deliver a steady return to the people that they pay out on insurance funds and their pensions, and was considered one of the safest places to put your real estate just because of how well it had performed over the last 50, 60 years. It's been one of the safest and best investments for people to make. And this is specifically why insurance companies and pension funds have always stuck their money here. And now people are staying completely clear of the New York office commercial space sector. I think it's going to be really interesting to see how this plays out. Like the Blackstone example at the start of this video, that in 2017 they had this property evaluated at $1.5 billion and then now liquidate it for only $1 billion, losing $500 million just on that asset alone. I think this might play into a lot of people who've been sitting on the sidelines, these big real estate firms that are going to come in and make a big splash in the coming years. So it's going to be really interesting to see how it plays out. Would love to know what you guys think. Do you think even with these really high interest rates, now that property prices in this commercial space are going at unbelievable discounts, do you think this will intrigue a lot of people who are on the sidelines to start buying some more assets? How do you think it will play out? In doing some more research on how these big real estate firms mortgage and finance these properties, they do things called non-recourse loans. So if they purchase this asset and they end up defaulting on it, they can only give that asset back. They can't come after any other assets that this firm owns or anything they can take in terms of collateral to make up for the value or go after them for that. So this put a lot of real estate firms at a maximum leverage with really low risk, that they're able to buy all these overvalued properties and literally have no recourse on if they defaulted on these loans. And it kind of just had a trickle-downing effect where all these loans came up, and now a lot of these people that did fund it, they don't even want to take the properties back from these real estate developers because they're not even worth what's left on the loans and the mortgages. So they're trying to figure out ways to extend, re-amortize, give them a better interest rate, just so for these real estate firms they can hold on them and still make ends meet, instead of getting the asset back at a massive discount that gives them no value either. So just for an example for you guys to understand what they do with these loans, real estate firm RXR defaulted on a $250 million loan on its 33-story office tower in Manhattan. And the developer that owns this property and manages it says it's going to be turning it back over to the people that gave them the loan. This property in particular in 2016 was valued at $440 million, and the loan company that is taking back over this property is going to be lucky if they can even get half of that, just with the way the current market is. So that's what I mean with these non-recourse loans. A lot of people that lend out to these massive real estate firms try to figure out ways to re-amortize, to extend, do anything they can to still have these people own and possess the properties, because what they're getting for that asset is almost at like a 50% discount of what they originally loaned to and how much they still own on the property. So it literally has not that much value to them, but just shows how a lot of these companies were able to take advantage and acquire massive properties with little to no risk to them because of the non-recourse loans. And if you're getting some value from my channel and you want to stay up to date with what's going on in the real estate market, please subscribe to the channel and hit a like. I would love to get some more feedback from you guys in the comments there on what type of videos you'd like to see me make in the future and what questions you have on the real estate market. I'll make sure I answer everything that's put down there, and I want to be your go-to resource for everything that's going on in the real estate market here today, because there's so much uncertainty and so much misinformation. You want to make sure you're getting this from viable sources. I make sure I fact check everything that I'm providing. One of my main sources that I always use is the Wall Street Journal, and I highly recommend people to subscribe to it. That's I have no affiliation, no attachment to the Wall Street Journal, but that's something that I've read every morning for the last couple of years, and I feel like it has the best, most sound advice. For most articles, they get multiple different people that give their perspective, so it's not just one person with a certain agenda that's pitching what they think. You get a really well balanced, diverse opinions from a lot of people, and that's why I think the Wall Street Journal is one of the best resources and who I typically use for all my information firsthand. The other really interesting part with the commercial real estate meltdown, places like Silicon Valley have seen around a 30% vacancy rate in some of their areas. And some of their tech leaders like Google and Meta are just dumping all the office space that they currently had in the Silicon Valley. And I think this actually sets the precedent for what a lot of companies are going to go in the future. So I think the commercial real estate meltdown, especially in the US, is in for a long haul. It's only going to get worse, where a lot of these companies now aren't making the same margin that they used to. And one way that they do that is doing these massive layoffs, which mean they need less office space. The amount of people that Google and Facebook in particular, Meta, laid off this year in order to boost their net income has a direct effect on the commercial real estate market, with these companies needing way less office space. And that leads us into, what is the residential real estate market going to go like, with the commercial real estate market in absolute shambles and pointing in the direction of a complete meltdown. And if you're interested to find out why in today's world, why so many young individuals struggle and why no one can afford a home anymore, you're going to want to watch this video next, where I go over that in detail on why people in their 20s are no longer able to afford homes.